This is Rebecca Petrie, paraplanner in the Houston office, and you are listening to the Ascent with Crestmont Private Wealth.
The opinions expressed are those of the host. The material is for informational purposes only. It does not constitute investment advice, and it is not intended as an endorsement for any specific investment. Visit crestmontpw.com for more details.
You're listening to the Ascent with Crestmont Private Wealth. This is Alec Walker, EVP of Financial Planning, coming to you from our Houston office. Today, it's the last day of school for my daughter's pre-K school, so I'm sure a lot of y'all are getting ready for end of school year, some summer travels, things like that. I know we've got a couple trips planned down to Galveston and Crystal Beach this summer. You know, they're not the prettiest beaches in the country or in the world, but they're our beaches and they're special to us. We spent most major holidays down there with cousins, aunts and uncles, family and friends. And so it's really neat to see our kids get to be able to spend that with their second cousins and the next generation. So we're looking forward to that and hope that you and your families have some fun adventures on the calendar for this summer. What I wanted to talk about today, when we're meeting with clients, there's topics that come up that, maybe it's been a few years since that question's come up, or we're seeing 3 or 4 clients have the same type of question. And when those things happen, that sparks ideas for us of topics that we can go over, because they could be problems that other people or questions that other people had that they're not voicing. And so what I wanted to touch on briefly today was kind of the topic of performance reporting and how to read that, and what should you be looking for and the right locations to read that, and kind of why the reason is. So we're gonna touch on that for the main portion of the podcast. But first, just real briefly talking a bit on the markets. We've obviously, when I've been on recently, talked a lot about what's going on in the equity markets and what's been happening over in the Middle East with the conflict in Iran. But kind of wanted to look at a different area. The headlines have switched to kind of talking about interest rates a bit more, as we've seen the headline, the 30-year long-term US Treasury rate has gone up to 5%. So those rates are rising. Some inflation expectations are rising. And that could be, good and bad news. But a positive aspect there is when inflation was high, we were hearing a lot about, the inflated yield curve. And so for those of you that aren't aware, the yield curve is looking at, from very short-term bonds, 3 months, 1 year, 2 year, all the way out to 30 years. When they're saying that was inverted, that was meaning the rate that you were getting on money in your savings account, just the bank account, was up around 5%. That was more than you were getting for holding a 10-year US Treasury. And a lot of times that can be some cause for it's been in the past an indicator for, hey, a recession is coming. So that's why there was a lot of fear in 2022 when that was happening. Well, just recently, I'm looking at the latest yield curve from JP Morgan's Guide to the Markets. We are now out of that inverted yield curve territory. We were just inverted as of the end of December of 2025. The short-term yields were still higher than those 1, 2, 3, 3-year yields. We are now in a properly upward sloping yield curve. And that's generally been a positive sign for economic growth in the future. Now, of course, there's obviously concern if the longer end of the curve keeps rising and rising, and the 30-year Treasury goes to 5 to 5.5 to 6. There could be some concerns on that as well. But at this point, the forward curve is not showing significantly upward pressure. So that's something we'll be continuing to watch. As it relates to bond performance, I'm going to pull up my handy chart here. Bonds are about 0.5% down on the year. That's the kind of US bond index. But if we just zoom out over the last 12 months, bonds are up 5.6%. That's just the index. Some of our other bond funds have performed better or worse than that. And that's much more than what you're getting for your money market, which is 3.5% to 4%. So still, there is some benefits to holding bonds in the portfolio, even though this year it may not feel that way with kind of that flat to slightly down performance. You're listening to The Ascent with Crestmont Private Wealth. I'm Alec Walker, EVP of Financial Planning. And today we're talking a little bit about performance reporting and kind of where to read that and what to be looking for. The two main points of access for our clients to access information on their accounts is through the custodian, which is Charles Schwab, and then through our client portal. The client portal is going to have all of their account and personal information that we've built out in their financial plan. within that as well, that's where our quarterly performance reports are also automatically uploaded to the vault about a week after each quarter end date. Now, many times clients, it's a lot easier. You got the Charles Schwab app, even though we do now have the mobile app for the client portal now, which is very handy to use, but it's right there. It's easy to access and you can see, okay, hey, what's my account doing today? What we recommend for clients is going to Schwab is great to access account statements if you need to provide financial records, access account tax statements for your tax reporting and tax documents. We direct clients to the client portal, to the performance reports that are generated through Orion, and we pay a pretty good amount per year for this performance reporting software. And it's really valuable because you're getting time-weighted performance report on the entire portfolio, on each account and each underlying investment as well. And even beyond that, you can look at each account. We've got clients that have been with us for over 10 years, and it'll go back quarter by quarter, year by year. What was the net amount that they contributed or withdrew from that account in that quarter? And what was the net performance or gain or loss during that quarter? So we've got this going back in history. When did this money movement occur? The custodial statements, what lacks there on the true performance is a few things. Number one, you can look at a position and quickly ascertain, okay, what's the unrealized gain or loss from that position? But what you're not seeing, and this is particularly true on fixed income for bonds, is you're not seeing, well, what's the total return inclusive of dividend payments and interest payments? This is really big for bonds because sometimes bonds, the price of a bond fund or a bond can go down, but that bond may have paid out 3, 4, 5% in interest payments that's showing up in cash in your account that's not showing up on the performance of that bond fund. So that's number one there, is it's not factoring in that total return inclusive of dividends. Number two is, when we're looking at our portfolios, we may decide we want to swap this holding, take it out, and add another holding in. Well, the performance of security A that we're removing from the portfolio, if you're looking at the cost basis or the unrealized gain, it's now no longer on that statement that you're pulling up in your custodial account. Yes, the value is still there in the account, but you kind of don't know where it's coming from. On the other side, if you look at the performance report, that account's total performance captures securities that are no longer in the portfolio, that haven't been in the portfolio for 10 years. Both good and bad, that performance is factoring in the overall return of that account. So that's really important to look at there. And then finally, the third thing, as I mentioned at the beginning, is it's a time-weighted return. And time-weighted is different than dollar-weighted. So here's kind of a great explanation that I think about, and we see this a lot with clients. Maybe they start out with a smaller amount under management. Maybe it's $10,000, and that $10,000 account goes up, 10%. So that's a good year. They're happy with that. And then something happens. Maybe they receive an inheritance, or maybe they decide to retire from their company and they're rolling over or depositing $1 million into their account with us. And they deposit that $1 million. And then day one, after they just had a 10% rate of return, day one of that $1 million, the account's down 1%. Well, actually, when they look at their account, they're going to see a negative total dollar. A dollar weighted return is going to show that, hey, that's negative, but in all actuality, their account is still up 9%. It just so happened that the timing of when they added money, so that's kind of we call that a net addition. The timing of when they added money is showing a negative dollar return. So again, that's the third thing is the performance reports, they calculate the time weighted rate of return, as well as net of contributions, withdrawals, and of course, advisory fees as well. So you're truly getting, hey, what is the actual underlying performance of my account? You're listening to the Ascent with Crestmont Private Wealth. I'm Alec Walker. We've been talking a little bit about, where to go to look for your account performance. We direct our clients to our client portal, to their vault. Each quarter, those reports are posted. They're available to review. And then we can, of course, run those reports on demand as well when we're meeting with clients to discuss. Real quickly, just on benchmarking, on performance, the frequency of how you should be looking at these accounts. To be honest, we look at our accounts and our portfolios for clients, probably on a too frequent basis. On a daily basis, we're meeting with our investment committee quarterly, but we honestly don't encourage our clients to look at accounts that frequently as well. Or if they do, not to focus in on it too much, because data shows that the more frequently you look at your accounts, the more likely you are to be, upset. If you're assuming that the market's down and that causes you to be upset, or the market's positive and then you're feeling good. Historically, the S&P 500 has been on a daily basis positive about 54% of the time. So that's kind of a coin flip. So if you think, hey, your mood is going to be good or bad based on a coin flip, and you're looking at your accounts daily, that can kind of lead to a little bit more stress and anxiety. On a monthly basis, the percent of positivity starts to get a little bit better. 60 markets positive. On a quarterly basis, a little bit better, about 65 to 70%. And then when you get to an annual basis, so we love looking at the red dot chart on JP Morgan, going all the way back to 1980, the S&P 500 has been positive right at about 75% of the time. So if you're kind of always talk about zooming out, the less frequently that you can look at your accounts and focus in on the performance, which is something, we really can't control to an extent. We can set the asset allocation, we can build the financial plan, but the underlying performance of the assets is something that's more likely that you're going to be feeling positive. And if we zoom out over a 5-year period, the market is positive over 90% of the time there. And so we really try to, review our account performance with clients in detail on an annual basis as we're reviewing, their strategy to make changes. Because the more and more that we focus in on that, the more likely we're to make, tweaks and changes that, sometimes can be at the detriment of our portfolios, over tinkering, over modifying those things there. You're listening to the Ascent with Crestmont Private Wealth. I'm Alec Walker, EVP of Financial Planning. So today we've been talking about investment and portfolio performance. If you've got questions on, your own portfolio, of course, if you're a client of Crestmont, we could schedule a time to review and discuss your portfolio. But if you're not a client and you've got questions about your own holdings, your own positions, please feel free to reach out to us. You can contact me via alec@crestmontpw.com or visit our website and email us at info@crestmontpw.com. We can actually, you can send us securely your account statements electronically or physically. We can upload those statements into our portfolio review software and take a look at, what is your risk profile? What's your overall allocation? Do you have, an overlapping of securities? Does this asset allocation suit your risk tolerance? How does it fit in with your overall financial plan? So we can use our tools and resources to talk through this with you, and talk about, what are the other services and offerings that we provide to our clients, not only as it relates to investment management, portfolio performance, but more of the big picture financial planning and more comprehensive tax planning and estate planning items that go into that. You're listening to The Ascent with Crestmont Private Wealth. Thank you so much for spending time with us today. And as I said at the top, I hope that you have some fantastic adventures awaiting you this summer, and we'll look forward to talking to you soon. Thank you.